Welcome back to Stocklabs. It's time to recap the third week of August, third trading week of August. It was option expiration week, and it got a little dicey, which has been pretty common for these option expiration weeks. If you look back through some of the previous months this year, it sort of has always been a down week, or there's been big down days right around this time of the month. I know we had it last month in July, we had it in June, May, and I think going back to even March was the same sort of thing. So, um, yeah, some of those in the past month they generated oversold signals for us in Stocklabs, but this week we didn't get one. At least on the hybrid side, I think we had some on the technical side. Yeah, so see, this technical is carved out here, but um, hybrid just almost, not close, not quite. Okay, so let's start with just what the indices did. Add week to date. So everything basically down. Down. Bonds were up. Gold was up, or gold was up a little bit. Nasdaq was down a little bit. Basically flat, and the other indices, S&P down 0.5%, Dow down 115 bips, and small caps again crushed minus 2.5%. So, the small cap trade is, I think either last week or the week before, small caps were looking interesting for like an up week, but just kind of a gut feeling I had was that the small cap trade is done. I think it is, it's this sort of cements it. This, you could sell bounces in small caps probably the rest of the year. But we'll take it week by week still from here. Okay, so let's move on to. Oh well, actually, let me look at the mega caps and do the same thing with weekly returns. So Netflix was up a lot, and Microsoft was up a lot. 4% week for Microsoft is kind of impressive, especially at the size that it is now. Um, and the rest were all down. Amazon down almost 3% for the week, has sort of been struggling since its earnings came out. I don't know if that was 2 or 3 weeks ago. I think it was about 3 weeks ago. They sort of kicked off some of these big tech earnings, but yeah, it's really not looking great. Amazon trading pretty poorly for a while now. Apple still sort of hanging in. It's basically up 12% for the year, which is, it's kind of just performing with the market. It's not doing anything special. And Tesla down 5%. Now, I think Tesla might have had a big week. I forget if it was last week or the week before, so basically gave that up this week. And yeah, so as a group, it's flat. They're flat though, plus 0.5%. So if you own all these, basically equally, then you didn't really see much action this week. Okay, moving on to industries. This was, pretty broad selling for the week, with materials getting hammered again, and this is, a pretty familiar pattern at this point. Consumer was down 3.5%. Financials were down, but usually you'd see financials down a little more than this, especially, because they're sort of materials and financials sort of go a little bit together since they both, um, depending on what the bond market's doing, if the bond market's, if yields are ratcheting down, so materials are getting crushed, then usually financials are not that far behind, falling off. And the same thing is opposite when yields are moving up, materials are moving up and financials are generally moving up too. But, you wouldn't, I don't know. Maybe the materials trade has just been more crowded, in the last few months. So there's just more of it to unwind. But usually you would see with this much materials underperformance, you should see more weakness in financials too, at least in my opinion. Healthcare down, healthcare is on a median basis that, healthcare stocks are just not good, not good right now. I mean, if you're camped out in some of the XLV names, then that's good, but those are, just some of the biggest ones. In general, a lot of healthcare and biotech stuff has been performing pretty poorly for a while. Industrials down, services down, tech down, all basically the same, and utilities were unchanged for the week. On a subsector basis, this is actually really poor because only thing up 5% or more was department stores, and then I guess number two is hospitals, but it's not even, it's 2.5% up, and the rest of them basically head to zero. We don't even have a full page of positive sectors here, so that's bad. And now you can imagine when I click on this, yeah. So the bottom end of this is crushed. Copper down 14%, silver down 10%, oil and gas down 9.5%, EVs 9.5% almost. On the first page, everything, minus 6%. We go to the next page, all this stuff minus 5, 6, 4. Really, really broad selling in the market for this week. So, yeah, the breadth the past few weeks, actually, really all summer, like the breadth readings haven't been that great on a consistent basis. You can sort of see, a lot of these we don't have that many days above even like, this line, this point right here is 60%, 59%. We only have like a handful of days that are even above 60% breadth in the market, but we've got a lot more days that are below, say 50-ish percent or maybe 40% ish, down in this area. So it's hard to find sectors and trends that are going to stick because everything is sort of just getting thrown all over the place with a general skew to the downside, with the exception of um, a lot of the big tech stocks or some of the uh, software stocks and things like that, which have kind of just traded on their own and remained more or less safe. And, some of the consumer discretionary stuff has held up well. I mean, you see stuff like Costco just goes up every day, um, but those sorts of trades are more risk averse, so they do sort of go with the rest of the market falling off. People are selling everything else; they're just piling into the safest sort of stuff they can find. Let me just look at this risk-averse index. Where is it? Risk-averse. So what's this been doing? Yeah, it's been going up. So since, this month of August is up 435 to 446, which is, and it looks like it's sort of breaking out a little bit, to be honest. But that's better than the overall indices. I think the S&P's up maybe like 1% ish for the month. I don't know. I'd have to go back and look specifically. But anyway, yeah. So broad selling this week, and if we look on a cap basis, I think this will probably appear how we expect it to. So 1 to 5 billion down 3%, and 5 to 10 billion down 2.5%, so slightly better. 10 to 50 billion minus 1.75%. 50 to 100 billion down 1.9%, so virtually the same as 10 to 50. And TerraCap's down 125 pips. So the quote unquote outperformers were the largest capped stocks. So people hiding out in large caps, not a surprise. And everything down at the bottom bottom end of the range, 1 to 5, 5 to 10, they're all getting hosed. So, if you're trading those stocks, you just have to basically reduce your your time frame, I guess, because it's like they're just not sticking. So you either got to sell them right away or whatever. You got to manage them. This is intelligence. Oh, hold on. I forgot that I had changed this and overridden screen. Okay. So intelligence, Russell, semiconductors, and what's this? Boyle, natty gas, and retail. So, yeah, I mean, I think probably semiconductors is probably your safest one. Russell Long is interesting. I mean, after these option expiration weeks, we generally get sort of bounces into month end. So, I don't think you have to be overly worried here going into the end of August. You could probably play stuff long, kind of cautiously, and just see what the tape looks like day to day throughout the week. I mean, if it's sort of really nasty looking with poor breadth and all that stuff, then maybe just stay away. But we did have a strong Friday with good breadth. So if that's sort of like a little bit of a interim bottom, then I don't see any problems with taking Russell long or semis long or most likely NASDAQ, because you sort of want the leadership. You want to be long the leadership, in my opinion. It's just how I do it. So let's just invert this. See if we get any other information from it. So VIX is supposed to be down, which VIX got hammered on Friday. That's sort of like, in my opinion, is a little bit of a tell that it's going to be sort of a mild week next week, because the protection is just being dropped, and people were probably adding positions to take long, towards the end of the month or whatever. Energy slated for a down. This bull ETF is rated negatively, so energy going to probably continue to be weak. And okay, so this cold is All right, so it's the opposite of the Boyle ETF that was. So Boyle is bullish, Cold is bearish. So I mean, natural gas, I guess, randomly as a trade could be interesting. And Fang is rated kind of bearish. So maybe the Russell trade does have a little something more to it. If Fang is going to be down or flat, then and you're looking for something to bounce. Obviously, the Russell is going to be the one that you know tries to make an up move. Although, like I've been saying in the past, the small cap trade I think is more or less non-existent. For it's fine to try it, but I wouldn't bank on it if I had to. Um, so that's just it. That's just from me. I want to see if there's anything else I can show. Um, Intelligence screener. We can look at intelligence for um, individual stocks and see if we see any sort of like pattern or something. I'm gonna make this 5 data points, and I want them to be up. All right, what is this? These are SPACs, don't want those. All right, so don't know. Let me make it over $1 billion. Just so we get something recognizable in here. Porch. I don't know. I actually used to own this a while ago, and it was just giving me headaches. I mean, it didn't like hurt me or anything, but it wasn't moving how I wanted it to, so I just dumped it. Okay. KC, mining companies, LNG, Upstart, been hot. CNX. So there are some energy stocks on here and things like that, but by and large, I'm not seeing anything that's too exciting. Seasonality. So we did say that August is, when we first came into August, that it's sort of like flattish to bearish. And right now, I think S&P is still up for the month. So that would be the one thing that could give you some caution for trying to, really do anything that's serious on the long side, is that, it could just, downside could just extend, that sort of brings the seasonality in line, as opposed to getting a post OPEX bounce, which I'm sort of leaning towards the OPEX bounce, but if it looks bad early in the week, then I'm not gonna worry about trying to make it happen myself. And then September is actually our most bearish month of the year, so yeah, we'll have to keep an eye on that and what the market and the setup is looking like, as we really get to the end of August, because we're not going to want to get caught into some nonsense, as soon as everyone's back from Labor Day and dumps all their shares on us, which would be suboptimal. Okay, so that's basically it. Tough week during OPEX, and possibly looking for a little bit of a bounce this week, but really not married to it. So we'll see what happens and where we go from here. All right. Thanks for coming out, everybody. Bye.